So if you wanted an update on institutional accounts, so I did take a little bit of a loss. Balance is £7 instead of 17 right now, because I closed the 2 trades in profit. But right now, the actual account is at 174 profit right now, and 180 equity. So I'm expecting the price to continue dropping. All right, people, welcome on. I'm going to start in a moment. Okay. All right, welcome on. Welcome, everyone. All right, so without wasting any time, I'm going to start the analysis session. Now, if you're not remembering and you watch this afterwards, you're like, oh man, I missed it. I'm live every Tuesday and Wednesday, okay, for analysis. So you'll see me on the live quite a bit. So I make sure that I get these things going on so that you guys can be ready to jump onto the live, all right? Let's go from there. All right. So without wasting any time, let me get started now. So it's been a fantastic ride at the moment. All right. I'm in quite a few trades. Of course, you guys know about the challenge account right now, or you should know anyway about the challenge account right now. So let's look at the price action of what we've had going on so far with the dollar index. So at the moment, all right, what we've had here, I'm going to go on the H4, is that the price of the dollar index, or let me put it this way, let me zoom out like this. On the dollar index, the price action that we've had has been pretty interesting. Okay, we've talked about this before, and you know, I know that the price will do some crazy things, but I want to take a deeper dive. Now, before I do the deeper dive, I just want to remind you guys of what we looked at. So if you guys were on the Friday session, now these Friday sessions, I don't do them for fun. I make sure that I put enough ingredients in there for you to make a very good, profitable protein shake, if you want to put it that way, right? We just talked about this on Friday, what the price did, where we saw that the market didn't give us any induction at these highs right here. We had a range of accumulation, then a pullback. And notice what the market done, just like we discussed. As soon as we hit Sunday night, the price came for the low of the previous day of last week. So Friday's price action, not Friday's low. We've had the reaction, prices broken back to look for demand in this wick here, and then prices continue for a long. All right, now if we trace the liquidity here so far, we've had a supply zone over here, and on the basis of that supply zone that's become a flip zone now, we have demand liquidity, which is where really the price was taken off from. Now we've had a strong pullback, and it's understandable because above these highs would have been a lot of liquidity, buy stops, sell stops, and all sorts, because we've had a very strong bullish trajectory for a while. Now, the only thing is, which is where I know that this was a premature move and just something to phase everyone out, is because when we look at the price action of what happened here, on the H1, we actually have body closes. So this is not really an induction, but this reaction that we have had here, though, at the same time, was really for grabbing liquidity. Now, questions are right now is that the price, is it going to continue in this long bullish trajectory? How long is it going to go for, and etc.? And I do expect it to go down for a long time. Now, there are two things that I'm watching. On the upside, the positive side of things is that there's definitely more room for the dollar index on the upside. I've been looking at this area right over here. Maybe I might have to zoom in for you guys to see it. Now, I've just done the worst mistake, which is to open every single chart. So I'll just double click on one to get rid of that. And then I'm just going to go back to the dollar index chart we're looking at here and zoom out. So over here, zooming in and then going to the left here. Look at what we've got going on. So over here, we have these highs, which are pretty close together. And we have these highs, which are even more close together. And then we have equal highs right over here. Now, with these candles, they might look a bit strange because you can't see any wick. But in a situation like this, when the highs and the lows don't have any wick to them, or a candlestick doesn't have any wick, it just means that the open price, for example, is also, in this case, for a bullish candle, let's start there. There is a tiny little wick here, tiny negligible wick. But what that means is that the open and the high and lowest price are the same price points. All right. And then on the other side, when you don't see any wick on the top side, it just means that the closing price and the highest price are the same thing. That's all it means, okay? Now, these candles are pretty rare to find. Usually, for most candles, you'll see that there is some sort of wick going on, all right? On the close side of this candle, we have the high and the opening price, because it's bearish, we're going down, is the same thing. We have a tiny little shadow, but we'll just say, based on the negligibility of this, that the closing price and the low is the same thing, okay? And that's for a bearish candle. So if I look at these highs, we have one high, which is 10. Let me just take my zoom thing out of the way. You can't see this, but I can. Let me take that out of the way. Yep. So we got 104.384. Then we have 104.381. Then this wick over here, the high over here is 104.377. So we have a cluster of highs over here going, down the list. And if I go to the next one, we have 104.039 for that. Oh, no, sorry, 104.107. And then we have 104.107. So these two highs are a liquidity pool, and that means that the price will be magnetized towards it in the future. And this blue area here, all right, if I go to the D1, is this whole supply zone. Now look at how far in deepness, if you want to put it this way, or how far in price would have to go to reach that liquidity pool, which is near the end of this body. And because of those highs over there, I do believe that the price is going to break right through. And of course, we're going to need a big push of liquidity to come into the market for that to happen. Now, the kind of liquidity that will push the price here has to be most likely some sort of new spike. And that's exactly what I do expect to happen. Now, surprise, surprise, we do have the FOMC news tomorrow. And this is kind of why I made the days Tuesday and Thursday, because usually Wednesday is the most tense day where I think maybe you wouldn't be live. I might start doing live news reactions, possibly. We'll see what happens. But ideally, what we want to do here is to prepare you for tomorrow. All right. I like you guys to have as much time, ample time to be prepared, right? So anyway, with these equal highs in mind over here, I'm just going to leave a little arrow over here to remember that over here we have these equal highs, right? So with these equal highs over here, which is a liquidity pool, I expect the price to run through this area. And I expect either the FOMC news or next week when I believe it's next week, I think it's a new month, but I think it's next week for sure. Let me double check the time. Well, today is Tuesday and 7 days from now will be the 30th. Yeah, so in next week will be the first Friday of the month of June. So yeah, that would be definitely something where the price would give us some sort of push within that range. But anyway, looking at this, I do expect the price to break right through. Now, the reason why, again, I'm not fazed by the dollar index. Now, if I've got you into looking at the dollar index, I'm pretty happy about that. I'm proud of myself because you should be. But anyway, with the dollar index here, the price didn't even return into any area of supply to produce this move. So this reaction of bearishness coming into the market is not coming from supply or demand liquidity, okay? Because there's no supply zone to the left really like that in this small range right here. The next closest area of strong liquidity is in this area here, which the price didn't reach, and specifically by a few pips, right? And then the price has dropped down here. So this move right here, this exact move here of, again, the range is about 20 pips, okay? Is to do what? Imagine if you were looking at this bullish chart and you also had a sell trade here. There's two things you can do. If you're a good trader or you're a wise trader, you may put a buy stop here so that whilst you're in a sell, if the price starts to reverse the other way, maybe you're going to close it when it gets to a 50% midway point. Then when it starts to rally up here, you're going to put your buy stop here so the price will continue going long and give you this bullish move, which the price is clearly in right now, right? Now, what the market will obviously do, especially in areas like this that have hung around for a while, especially for people who are support and resistance traders, is that they'll engineer liquidity in a sense like this and drive the price just above the high, trigger your pending order, and then drag you down the other way very quickly too. All right. So within 2 hours, 32 pips away from you and most people put their stop losses about 20 or 30 pips above or below. Now you only have two options here. Either you drag your stop loss really wide, which then you won't be stopped out, but you'll be in a big drawdown, or you get stopped out. All right. And so this is the engineering of the market when it comes to price delivery mechanisms, right? So now that you know this, and the price didn't do it without needing to go into supply, you know what was going on here. So I expect the dollar index to recover soon. For me, I was looking at this area here of supply because this supply zone here, if you can remember from our episode 6 of our session that we had for the game plan. We looked at this zone in very deep detail to critique what was going on. Now, the supply liquidity that the price drew from to actually produce this short was this area here, right? So now that the price has given us a strong close beneath here, and now it's come back to the other side, is wicked into this area, I would have preferred a body, and probably the price might actually descend lower to do the body move and then take off long. Another thing here is that the high of Friday is right over here. If we connect the high of Friday to where the price has been wicking around, you can see we have a lot of activity going on. We have a wick long, which would have triggered buy stops again, or stopped out people who were selling possibly. Then we had another one again during the Asian session, and bam, we had a very big bullish run, so they were right. Then we've had a few more candles. Now, then when the price came to the next set of where buy stops or sell stops, whatever kind of pending order stop losses there, it triggered another one, and the price bounced right back to the first range right here, which is just above the high. So either way you put it, this was quite a cheeky move. But understanding this, which is why I was expecting, I knew the price would give us a pullback of some sort. This is the expectation that I had. All right, so now I do expect the price to go long, and there's many ways the price can do this. I'm resting on this supply zone, but if the market really wanted to, it can even use this. If I take this zone and just make it a little bit darker so that you could tell the difference. Even if the market wanted to, it could decide to come back in here and maybe come back to demand or 1 or 2 as well. Tomorrow doesn't really make a difference. It would just mean that there might be a deeper pullback on Forex pairs. All right, but nonetheless, the price has done a pretty good pullback. Okay. It's dipped into 2 areas of supply flip zones, which is demand liquidity, this one here and this one here. So we're pretty good. Now, if you look at the anatomy on the 30-minute, it actually looks even sweeter, because on the 30-minute time frame, the supply zone on the 30-minute, and in this case, when the candles are a bit gapped out, you just fill it up with the top of the open price on the demand side anyway. The price has literally returned to the other side of supply. So either way you put it is pretty good. If you want to, you can even use these 2 candles here, because even though this is the last candle before price change direction, you can see that this is a lot more wick than body. And you remember the rules? If the candle has a lot more wick than body, then it's okay to use the candle before as also to add in just the last 2 candles, but nothing more than that. So if I take this over here and I delete this, then right now the price is operating in a really healthy range of demand. And it's a very key break that's important, because when the price dropped down here last week, we needed that body close to really come in. And we have that body close now. It's come to the other side. And that's why the dollar index is actually pushing long as it is. So pretty nice stuff to see, actually, how price is operating. Now, obviously, a cause for caution is that, yes, there's always room where the price can decide to do something crazy, which would be what? Well, in this case, we'll have to really watch to see how the body closes happen, because right now, it's obvious the price wants to go long. But of course, the market is pretty cheeky as well. And the course to go long can become, they can make sure that it's a winding, annoying situation. We have a liquidity gap here, so that obviously needs to be filled. We have these highs over here, and of course, these highs too, right here. And we have these range of highs here. So it's an obvious reason why I would say that the price definitely needs to fill out and do a very strong long inside of this area. But the thing is that how the price will achieve that can be many different ways, right? So we looked at this area on the D1. The price did a pretty good job right here, but we always need to be aware and prepared to see what the price is going to do, right? If the market would, be so gracious to us and continue, that would be great, but it may not. Okay. And this is where I want to focus on before I go to Forex pairs. All right. Because if I prep you here, then you understand everything else I'm about to say, right? So if we look at the price action of what we've got going on, we've got a situation where we need a body close, okay? Just like what we said last time when we were looking at this supply zone area. And remember, the price broke above this very strong supply zone area from March, returned to the other side, gave us an induction, and then bam, we went long. We need exactly the same thing, but now we need it on the H4, and I explain. So first things first, because this is the high of last week, we need the price to confirm to us that it wants to have a continuation on the other side. Because the other side of the story is that at 5 o'clock, because the dollar index times is slightly different, at 5 o'clock, we'll have our next H4 candle. So what we do need is that we need either today, okay? Because the price hasn't gone into supply yet, so we can't really make any judgments. But when the price does get into supply, we need to see how the H4 candles close. Ideally, again, and I'll use my little candlesticks here as an example, we need something like this where at least the midpoint of the H4 candle closes above this high and even this high. If we have kind of like a midpoint of the body of the candle closing, at least 40 to 50% of the body closing there, and I'll make it skinny like the other so it adds up. So something like this, all right? Even if the price was to decide to do, say, maybe a little bit of a reversal, I wouldn't be so worried, okay? Now, I'm not saying worry because it's supposed to be something to fear because the price is going to go long. However, the other side of the story, though, is that we don't know with the news tomorrow because there is, I would say it's a cause of concern, but there is a chance that the price can do this. And I'm going to show you what I mean. On the H4 here, guys, remember all the blocks always have to balance out. And there's always opportunity for the market to do such things. And then after, you know, you'd be so surprised how the market gets you. Now, on the H4 here, as much as I like the reaction the market did at the beginning of the week, which is great, my only issue I have here is that the price didn't return to this H4 order block. So my thing is that on the H4, all right, I'm still looking for the supply. I'm not going to buy that the price is just going to sell off. But what I am looking for is to be careful to make sure that the price, when it gets in here, we have a strong body close. Because if we don't, there may be a situation, even if not now, that I'm always going to be watching this H4 area here because price didn't return to demand. We have unfulfilled deficiency here. Now, don't get me wrong. There are some times where price will leave an unfulfilled deficiency hanging around for a pretty long time. Very, very long times, in fact, all right? But my thing is that if the price leaves this for too long and continues to rally to like, obviously like 105, then I wouldn't be expecting that. But if the price starts to hang around this area for too long and it keeps wicking above highs and stuff like that, then I would be a little bit cautious and maybe not, how can I put this? I wouldn't just stay in the swing positions I have on the challenge account at least. I would be coming out, okay? Because on the challenge one, at least, even though I've got high up entries, we may have one of those final kind of rounds because I can see that the market right now has spent the last week trying to stop out traders at every opportunity. It seems like every single day, there's some way that the market is trying to really get you to quit, right? So for us to kind of be intelligent traders here, we do need to think of the positives and of the negatives, right? And the negatives here at the moment, the only problem I have right now, literally the only one, is the fact that this H4 area of demand has had no wick into the area. The low is right here, okay? And let's just make this blue. The low is right here, but price hasn't returned here. And there are times where the market can leave this by, it's not a necessary accident. This is just because of liquidity. There's not enough liquidity to pull back right now. So they don't pull back, right? But then there is another side of the story where the market leaves what I call landmines, okay, where they'll let the price continue running up and make everything happy and nice for everyone. And then bam, just come back with a sharp movement, which will require news. And this brings me to my point about tomorrow's news on Wednesday. We have the FOMC news, which of course is written news, not a data piece of news. So the market's not going to react straight away. But my thing is though, is that again, if there's no strong H4, I think even saying this, I think if there's no, at least maybe a very strong H4 candle close above this body and maybe a second one just to make sure, then I would be a little bit cautious around this area, guys. And I don't want to kind of, again, not tell you both sides of the story. We are long. If you're swinging and you've got entries back down here on other Forex pairs, that's no problem. You know, gold from the time I called the short has done about 700 pips. So like if you're in a position like that, you should be fine and dandy, right? But, you know, because of this same reason, I do think that it's important to also think about this side of the story, because what if the market decides that they want to do as I call a landmine, and I'm just going to take this over here, wants to do a landmine over here and just say, okay, we're going to move the market down one more time and then go for a long, right? It's possible to happen, all right? And just because it hasn't happened yet doesn't mean it can't happen. Now, of course, if the price, you know, does many H4 candles and is up here, I'm not going to be worrying about the price coming back down here because it wouldn't make sense. It will cost them too much money to pull the price all the way back down to 102. You know what I mean? So, you know, with that being said, this is the only thing I'll say as a caution, guys. We need to watch this H4 close. not without the supply zone, because that doesn't really count, okay, in terms of causing the price to reverse, because even though the price can, cause, or market makers and etc. can cause the price to spike and then reverse the other way, they can't hold that kind of liquidity forever. They're going to need to use an order block, so that they can really get orders into and the order flow to work properly in the market. And that kind of order flow would only really work, okay, if it's in an order block as big as this one on the D1, right? So on the positive side, the price will go short. Excuse me, will go long. My mind is switching on the two. I'll re-clarify that again. For a positive, looking at the left here with all of the different liquidity price structures here, the price is definitely going to go long. But the way the price will go for that long is what we're discussing right now. Okay, so just recapping really quickly, if you're jumping onto the live now or whatever, what I would say to you is that we need to wait for that H4 body close. If the body of the candle doesn't close above this H4 area strongly, and let's say we have another H4 session and the wick of the candle gets into this area, but then it still closes beneath this low, or we have maybe, let's say, the body slightly just close above, like really tiny, like at the line, then I would say to you that we should be careful. Maybe one more H4 cycle just to give it a chance, or we're going to be out and then just get a continuation trade going instead. Because this is how when I'm observing the price, this is what I'm thinking, And for me, obviously running the challenge account and having fun with it and everything, I have this at the back of my mind that we still need to be watchful of the price, because the market is very cheeky, and swings can happen at the speed of light, literally. Okay, so I don't want us to get too excited about the trade profit, because the profits are obviously good, don't get me wrong, but I still want us to kind of be wary about that, okay? And I wanted to bring that to light. I didn't get a chance to bring it to light, I don't think. But, I want us to see that, right? And especially, I'll be honest, like this movement here that we had is at the beginning of the week, this stop on. So who's to trust a movement that happens just at the beginning of the week, just like that, within the Asian session too? It's not really, the most convincing sometimes. So these are the kind of factors that I'm taking into consideration when I'm thinking about what the price has done, that there could be a chance that the price will just pull back here. And then we're going to go for, these major longs here. So this is really it, okay, when it comes to price action. So now that you know these things, we can look at a bit of Forex now, all right, and just see what's going on. So I'll show you my trades in a moment, but I can just stay on here because sometimes I guess seeing the trades on the chart can be a distraction to actual trading. So let me just try to do without the charts. This is an account that I don't really use, it's just there. All right, so far so good. Now my AUD USD shorts right now are looking pretty nice. Okay, for me, if you're wondering, if you've been following the challenge account or you've seen the trades I'm in and you're trying to work out what to do, for me at the moment, I'm looking at this low right here, which is the low of last week. That's my concentration point at the moment. When the price gets to the low of the low of last week, I might actually just close for now. All right, and I explain to you why. Just because we have the news that's coming out, even though I know that AUD USD is going to go short, we have the news that's coming out for the Australian dollar, New Zealand dollar at 3 a.m. UK time. All right, and I know that news is going to be highly volatile. And with the Australian dollar pairs and New Zealand dollar pairs, I'm giving you the kind of, what can I put this as, I don't even want to be an advocate for the devil, so I won't even use that. But just taking the opposite side, or the counter thesis, let's use that word for what the price is doing. So for me, if I go over here to the D1, let's start from here. So first of all, AUD USD is definitely a short. This last reaction here, where the price came for the high of the previous month, was a pretty strong and powerful reaction. All right. Now, the downside potential for this, as we've looked at, is very far down. We're looking at the sub 61.61 levels. And again, the way the price has structured itself, it seems really well aligned and set up for a short. All right. Now, there's two sides to the story. I might keep it open. I know there's a liquidity gap here, so the price should be going short. But I know that it is going to get highly volatile, and I don't want to get caught up in the market on the wrong side for no reason, even though I know the price wants to go short. Now, how I know it's going to go short is clearly because over here, this low and then low of the next week after that, which was last week, we had a very strong body close. Now, the price pulled back up above this range, and notice that I used the demand zone area here. as a flip zone, as I've taught you. So the demand became supply. And then within here, if we trace all the liquidity in terms of supply zones, this is where the price was operating from. Now on the H1 time frame, the price did a really cool move on Friday, which I latched onto. Even though the price on Monday nights, Sunday night, Monday morning, UK time, gave us a market open that was a great entry for us. I still kind of wanted to just stick with my entry. When the market shut down here and came back here, I decided to take full advantage of this movement and get as much trades going as I can. So I do have quite a few trades, which is on the challenge account. That's not my normal style of trading, but for the challenge account, I don't mind. Now, today we had quite a nice reversal. Usually at 2 p.m., there seems to be this kind of pullback that comes in. I don't know if it's because Chicago opens or Canada and stuff, and kind of they pull the price back, you know, institutional manipulation again and trying to get cheaper price levels. I don't know per se what exactly causes 2 p.m. to be what 2 p.m. is, because there's different reasons. I do know reasons for it, but in this case today, I'm not too sure of the reason yet, but I'll probably figure it out later on. Now, for me, I still want to hold AUD/USD for one more day, just because, I mean, these lows here are basically close to equal. The price formed a really nice supply zone at the low of this area here. So that's where supply liquidity is, which is a good sign. And there's also broken past kind of like major demand zones here that caused the price to go long. Like this one is a very clear one right here. If you look over what the price did, this was the long that actually produced this reaction here, where I took a couple of number of trades here. So when the prices come back to the other side now, I'm quite confident that the price should continue going short, right? So for me, when the price gets towards the low, I'll be watching to see what the market does. I mean, this spike right here, these highs are equal. So this is another reason why I'm saying that I may just, when I'm saying I'm getting out of the trades, by the way, let me explain. When I'm getting out of some of the trades, the reason why I'll get out is because the profit that I'm going to make from coming out, I do believe that possibly some of the New Zealand news might cause the Australian dollar to also react, and we might get these nice pullbacks where I can get the same entry again at the same price, but instead of being at break even, I could have made all the money I made from the first down moving and get back in again. And sometimes it's nice to have that, because if you guys have been trading for a while, you know that sometimes the price will come back to your area. I'm sure it's happened to all of you, where the market will come back to the area that you traded on more than once. You know, especially if you've got multiple trades. Like if you think about me from here, the prices come back to my entries. Primarily, they're within this 667 or 27 to 291 roughly. The price came back to this area once, twice, 3, 4, 5, 6, 7, 8, 9 times before it decided to descend short, right? Took a long time for this liquidity to come into the market, this major one that's caused the price. So for that reason, you know, I like to take opportunities and just plan for a re-entry. Yep. If I close it and then the price does 200 pips afterwards and I get in a bit lower down, I don't really mind, to be really honest, because as long as the profitability is, you know, where it's supposed to be, that's the main thing, right? It's a challenge account. The idea is not to blow the account. And of course, once I close my trades, I'm actually going to have even more profit to say, yeah, well, I'm going to ride the wave down even further, right? And this is kind of the methodology that I'm going by when it comes to trading these pairs. So this is what my idea is with AUD/USD right now, okay? NZD/USD is another one, which I think is also a brilliant trade. Now, I do think NZD/USD is going to be a good one. I have one position on NZD/USD, all right? And the entry that I have for it is based on literally the supply zone range over here. If I go up to the top, it's this area right over here, this supply zone range, all right? Now, the price took the high of the previous day, and it actually gave us a bull trap here at the end of the trend. All right. We have this engineered liquidity here that the price broke straight away and broke beneath it. So that gave me a bit of joy right there to know that the price wants to go short. Now, with NZD/USD, very similar to AUD/USD, I do expect there to be a major short. We've gone through, I'm not going to go through it now to bore you, but we've had some there are major targets that NZD/USD can go to, which is at the 0.048 level, right? Now, for me, my thing is that with NZD/USD, it's another pair that I don't want to hold for too long, just because even though I know it's going to go short, there is also room for the price to go long. Another thing that I kind of am a bit weary of with NZD/USD is that, you know, these highs over here, these weekly highs are equal. All right. And then we have another weekly high or monthly high, sorry, to be specific. That's not too far away from these. And then we have this. Now the order blocks though work out pretty well. And what I'm going to do, I'm going to lighten it so that it's supply. Let's just go for this. Let's go over here. So if I take this over here, draw the supply zone right over here. This supply zone here was lined up with this price action over here. Then the price is broken above it, right? And then dropped beneath it. So this supply order block is no longer respected because price is broken above and beneath, as I've given you the rules for, right? So the next area we're going to look at is the next supply zone or demand flip zone. And when I do that, this is where kind of like the alarm bells kind of go on. And you can see that if I follow the exact body here, none of these candles have entered into this flip zone, at least on the daily. As we go up to the weekly though, all right, things change a bit and we do have a weekly demand zone. That price is broken beneath, come to the other side, and just has been accumulating underneath for a pretty long time. All right. And I guess you can see these highs being equal more. So I'm a little bit suspicious of NZD-USD in the point that I know it's going to go for a short. It's going to rally down massively. My only problem is that is it going to do the massive rally and ignore some of these highs right now and then come back later to fix it? Or is it just going to go for a short? And in historical moments like this, it's a split decision that you do have to make. For the case of NZD-USD, I'm being realistic. Because I have an entry literally at the top here, I'm holding whatever the weather. The profit that I have on NZD-USD is not really, kind of compared to how would I put this? It's not really compared to what I would gain if I stayed in and it done, the next 300 pips I'm waiting for. Because if the price does what I'm expecting it to do, then really there will be no need to close it at all, because I won't be closing this historical trade until it fills the unfulfilled efficiency from the 2008 low, which I know is far away, but I'm holding this until the financial crisis literally happens as expected. And we get this big sell-off and then bam, 48 right here. Okay. Now you say, Mike, why are you holding it for so long? Well, this is a challenge account. And of course, if I do that, I know I'll have a lot of profitability and it's a historical moment for me to hold on to trades. Now, it just takes the right event for it to happen. And it's not wishful thinking. I can tell you that for free, because if we look at COVID, right? COVID-19, when it came out we have February here, here's March. As soon as March happened, within 1 month in March, we had 1,000 pips, almost, just less than 1,000 pips. And that just less than 1,000 pip situation right there put us in a position to get a pretty good, let me just take this off, to get a pretty good, how can I put it, a pretty good situation when it comes to trading. Let me just mute myself. Sorry, that's my phone, guys. But yeah, so basically, what I do expect, sorry for my phone, but yeah, what I do expect anyway is for the price to give us a very strong short down here. Now, we could even target and say as an intermediate target that there's a algorithmic level here at 54,443. When the price gets here, maybe I hang around. And of course, there's going to be bullish and bearish movements in between. But because of 2023 and the cost of living crisis that we're in, I just really don't buy the fact that the price is going to really not give us a strong short for a while, right? The same way the price gave us a strong long coming into from 2022 into 2023, literally every week, every month was bullish. So 1, 2, 3, 4, 5. We can have the same thing on the other side. And NZD-USD has at least completed the requirements up in this area to do so. So I think, looking at it, like I do think NZD-USD has potential. All right. I will hold on to it to see what it does, because we have news for us in the UK at 11:45 p.m. Okay, just before midnight, which is New Zealand dollar retail sales news. Maybe they might use it to pull it back, the price back, but I still want to give the price a chance to show what it's made of, right? Now, in terms of premium and discount pricing really quickly here as well, if I put this on, all right, where the price dropped from was this equilibrium point right now. It's come back to this 38.2 and 23.62 range, which is a retail trader price level. So obviously this is going to be a premium price. So for me, when the price starts to get beneath these areas and continue going for a while, then what I'll be looking for will be the next major bearish trend, like over here. And if I do this, guys, and as I'm following through, you see why I'm thinking about these pairs the way I am. All right, if I take the range from top to bottom, then you'll see that equilibrium right, is just beneath, right now the price is operating just beneath equilibrium right here. And if I do this, then this was in discount pricing, which is pretty good, right, over 62. For me, I'll be real with you. There's one side of me that thinks that NZD will go, NZD-USD might go for a long. Doesn't have to, but it could do. There's a liquidity gap up here in this range. I'm just going to put this here. There's a liquidity gap over here. And the optimal trade entry starts near this order block here, which is the main supply zone. So my thing is that obviously if the price goes here, is an obvious sell to probably some people, not everyone. Because if you're looking from the other side, and I wanted to do this here so you can see this in action. If you're looking from the other side over here, right, the price, if it was to where it's bouncing right now, all of these levels are all retail, 38.2, 23.6. Price has bounced here right now. Well, prices come to another retail level, which everybody will be expecting to buy up. So I'm watching this with a pinch of salt, and this is why I keep saying that with NZD-USD, it's a bit of a sticky one. I still think that it might go long and then short, or pull up a bit long and then go short, or it could just descend short. But I'm going to keep my entry that I have at break even and just allow the price to tell me what it wants to do. All right, that's the key here. All right. Now, all the liquidity pools on the left-hand side, which are going to be run, there's not a problem. It's just a matter of when. Again, this is why I'm saying to you, when I gave you the dollar index is going to be a great key to help us, because if we see the dollar index breaking far above on the H4 over here, and we have that strong H4 close, at least two of them, and the price is rallying, then it'll be highly unlikely NZD-USD will be doing any sort of long, really, or any lasting long. That's just the truth of the matter. So this is the key here, right? This is what I'm looking at when it comes to the price. So yeah, these are the thoughts that I have going through my head. All right. I've also got Pound USD, which Pound USD has been a great one. I've loved what happened with NZD-USD, of course, too, but Pound USD was better for me when the price did its initial short this morning. All right. The reason why is because we have a H4 body close, and this is what I'm talking about. This is what I mean when I say that this is a good confirmation of a continuation short. All right, tracing liquidity. Now, my main entry for this trade is right over here. My entry is literally at this point right here, okay, for a short. Now, with Pound USD, okay, because we've had this strong H4 body close with two candles, or one candle here, and it will be two most likely in an hour and 19 minutes. This body close right here lets me know that the price is not looking for a reversal at the moment. Again, you know, looking to the left, if I just use even H4 zones, there's so much unfulfilled efficiency on the way up that hasn't been dealt with. And I believe that gives the price room to give us some really good, all right, shorts on the downside. So if I take this over here right now, and I just drag this across here too, you see how much we've got going on. We've got these zones, we've got these zones over here, which is 121 pips away. We've got this one here, which is 160. Or if we go down to the daily time frame, now we know with Pound USD, from when the market crashed at 103, we've had a great recovery. Okay. And if the pound wants to recover in full, then we need to have one more pullback. We still have gaps all the way down to 1.11, which is where I think the limit they'll allow the price to kind of hit off at before, you know, reversing the other way. So if we take this now from top to bottom, what I can say positively though is, for example, if I took this movement here, equilibrium points that we'll be looking at, and one way that we can do this is just look at the equilibrium points only and set up kind of take profits, or where we should look at, and we can write this over here. We have this equilibrium point, which is just beneath the low of last month, right? So first one. If I extend this to the larger one right here, where's the 50% level? The 50% level falls right into the major unfulfilled efficiency. When you're looking at demand to the left, and to prove this to you, we have two unfulfilled efficiencies along here. The last one before the price rallied and never came back is this one right here. Because after price went into demand and shot up, you can see we don't have any candles that have come back into this area. So the midpoint kind of fair pricing for this range right here from September till now would be about 115, all right, which is about 913 pips away. So that's why I'm watching the price and I'm keeping these price points in my mind. And I wouldn't close Pound USD, even though it's kind of done a strong reversal from this morning's price action. It's almost done more than even what it originally did in pips this morning, but it's fine. But if we're tracing supply right here, really we're in this small little area here of supply right now. And what I'm hoping for is that just like with the AUD USD pattern, which looks like the price is forming into that kind of situation here, is that the body of the candle of the lowest down demand area before the price went long, we want the body of the candle to stay in here for pound USD and then continue to rally down at least to give us these couple of pips that we're looking for. All right, so this is what's happened with pound USD, and I love the way the price has done it. Kind of, you wouldn't have expected it, just bam, and I'm on my way. All right, but this is what we're looking for. The 245 UK news done that. All right, so this is really where my mind is at. All right, and I'm trying to just show you how I think when I'm trading so that you kind of get the flavor of what I'm looking at and stuff like that. USD CHF, USD JPY, I'm not really looking at too much because right now the Japanese yen, of course, they're making itself as weak as possible as a currency. So the pullbacks that we're having and these kind of swings all over the place, USD JPY is not experiencing the full brunt of it. You can see that it was quite quenched, if you want to put it this way. Not much happened, you know, going forward from there, right? So let's look at USD CAD, the last major pair. Now, if USD CAD, as I said, is such an annoying pair to me, that's why I don't trade it. And at the moment, the price is pulling back. Now, I said this to my academy students, and I'll say this to you guys, that because these lows right here in Asia, one is in Asia, both of them are in Asia at almost the same time were created. And this was kind of like the launching pads for the price to go long. I don't buy it. You know, I never bought what the price was trying to sell to me. Right now, though, I do think USD CAD is pulling up for a really good entry. Why? Because if the price, you know, and this is like, I think on USD CAD, this is like the fourth time this has happened where you take a long on USD CAD. It happened here originally, which is what stopped me out, to show you how manipulated the USD CAD is. And it's not really, I really don't like it as a pair, honestly. I just think that it's a pair that is highly manipulated to degrees that are just unnecessary sometimes. All right, because it becomes just stupid at that point. That's what I say. All right, but anyway, ignoring my rants anyway, this is the low of the beginning of the day, right? I would say I ignore this, but just focusing on the beginning of Asia. Price rallied up for a long. In a moment, without any warning, not really in any supply liquidity, pulled back the other way, gave us a short and ended up down here, right? So liquidity going long was swallowed up by the liquidity going short. Then from this point, we had a progressive long, then we had a second one, right? Now, again, today what's happened? The market put you in there. We had a couple of entries, one in Asia, one in the London session, which are both outside the liquidity time for USD CAD, because remember, USD CAD is a US session pair only. And I think this one kind of catches people because the US of A and Canada's central exchange, which is Toronto, and US, which is New York, doesn't open until around about 12 UK time, 1 o'clock UK time. There's still an hour difference between the two, or 2 hours difference, somewhere between Toronto and New York, somewhere there. But the reason why I didn't buy this is because all of this activity here until we reached, and this 12 o'clock is actually 10 o'clock. So 12 o'clock UK time is actually 2 o'clock on market time. So 2 o'clock is right here. Until the market opened, right? Everything seemed fine with USD CAD, right? And then all of a sudden, bam, the price pushed down for a short. So what's going on? They're pushing the price back down and they're going to run these lows. So really, the best entry for USD CAD is actually pretty much now, where if the price is going to go long, it needs to take these lows here and then push up for a long. Once it does that, then that will be a hunt of the previous Friday's low and also today's low. I mean, Monday's low, excuse me, and today's low. And then we can go for a long. All right. And this is exactly what I'm waiting for. So if you want to take entries, I'll give you the entry for this trade. So I would say, even if I was to put the Fibonacci on here, right? This is around about the 86 level. Right now, the price is an optimal trade entry. The last level I look for is 86. So I'll say look for a buy, all right? And I'm going to put the entry price. I always usually give an entry at the beginning of the order block, because maybe if your spread is high, it might not trigger the trade down here, or may not even get down there. It might just touch into the area, and that's all it needs to kind of, you know, take off for a long. So with that being said, what I would go for is, I'll say look for entries at 1.34380. All right, so 1.34 830 basically. All right, and then for entry All right. And then with the take profit now, because this is taking so long, I know it's probably going to take off and do a great long. Now with the stop loss, there's two sides to the story. On the H4, we could take the stop loss to be really beneath this low over here, because this price actually, and I need to zoom in to make sure, because this isn't key here. Following the H4 order block, this low has entered into this demand zone. So there is liquidity here. So we can go beneath this low right here. We'll say now, just before I do that, I just remember something. I think these lows were equal. This low right here was an equal low. Let me just double check, right? And then after I'll give it to you. So if we go down to the M5, see, okay, M1. Yes, even the M1, the market does look at that. Now it took me all the way back. I need the day of the 19th. So I need to scroll forward quickly, go to the 19th. I'm just going to check, make sure. 19th. All right, so the 19th, the lowest point should be not too far away. All right, so the lows are not equal now. It doesn't look like it from here. No, they're not equal. All right. I really like to check that stuff, because sometimes, you know, you think the price is going to stick to your stop loss, but there's a magnet underneath that is about to go for. So I'll say get in for an entry now at 0.30. No, not at now like that. I mean, when the price gets into the order block here, so 0.30, 0.27, I'll say stop loss beneath this low of 0.34671. All right, very simple and wide stop loss, so that you guys have room to think about it, whether you want to be in. So 1.34674 is the SL. Now with targets, let's talk about this before I leave here. With the targets here, there's two sides to the story. The major one though is that on the H1 time frame, all right, when this reaction happened during the Asian session, this was already a big no-no, because this is outside of the liquidity time of the US Canadian dollar anyway, right? So that's the first thing. So that was already a bit of a sign of caution that you need to be careful. But then, of course, the price has been using that as a manipulation. So I knew that this is just a manipulative game that's being played at the moment, right? Now, if we look a bit further back to where price should also have been, now, if you look to the left here, the supply zone, the only supply zone nearby that the price could have possibly used to do this sell should have been from right here, okay? And the price has completely missed that and left it alone and continue going short. If I use the daily, then you could argue that, okay, yeah, it's in daily supply, so why not? But then we have this over here that the end of this liquidity void movement from the short hasn't been filled out. So either way you put it, the price should have been around about here to do this sell-off that is done. But because the price intention is not for a sell, this is why the price is doing these kind of movements, right? So my first target to put this in perspective here would be, there's a tiny little M30 supply zone right nested over here, which is where the first target will be 1.35841. Now, if the price breaks past that, and even if he hits the target and you want to come out and then get in again, once the price breaks past that, really and truly, this should be flying. We have liquidity gaps here from news back in March that the price hasn't filled out. We have the high of last year, which is not too far away. And then we have the really big target, which is on the basis of the USD Canadian dollars long-term bias right now, which is bearish. Okay, let me just close all of this for now. Actually, I can't really because of you guys. But looking at the long-term price action for USD CAD, these highs right here, one in, get this over here, one in 2016 and the other one in 2020, which I was witnessing and watching what the price did here. Both of those highs over here, if I just drag this supply zone across to the left here, what we do have is unfulfilled efficiency on a very high time frame. The demand or the supply liquidity to drive the price down really hasn't been there. When the price took off for a short year, we had a few movements here. But if I take this line, take this line, and take this line, let's take this over here and over here. So the only thing is that because over here, the supply zone, if I drag it over to the left, notice that the body of the 2020 COVID candle closed above this supply zone and back beneath here. So this supply zone has become invalidated, right? And this is why the price is held in here for so long. And the candles in basically in retrospect to the entire space and span of this chart, these candles here are not really moving too much, right? There's not really much going on because the liquidity is low, because this is not even the supply zone. This is the new supply zone focus, right? So really, once the price breaks above here, 140,715, then this will be rallying on a very strong bull run for a while. Okay, now it might take years to happen. We don't know. Or this could happen in one kind of 1 year cycle of a financial crisis that causes the dollar to gain strength, right? So with that in mind, these are my real targets. I guess the best target you can go for, where you can kind of say, all right, I'll hold off and see, because of course there'll be bearish moments in the market, will probably be the high of last year. That will be the main target. So 1.39668. So let's see what the price has done. Has it taken the low? So it's dancing around right now. It's taken the low, but it hasn't gone into liquidity yet. So can't react to that just yet. All right. But I think I'll take this live with you guys on my other account. So let me come back to my other account. Let's pull up USD CAD and let's have a little trade together and see what we've got going on over here. So USD CAD. So I've got my NZD USDs and stuff. Let me just go over here. Now I'm actually gutted that I had this marked out and I should have just taken the trade. I actually spoke about it on a live session with my students, but I just feel like I have so many trades open that I didn't even want to really go again. And it's just a big mistake to have not taken this. Is just really dumb. Really, really dumb. So great trade. All right, anyway. H1. All right, here we go. This is it. So here's the H1 area over here. All right, what we're looking for with USD CAD is that it needs to get into the low. So this is like we're trying to hunt for a creature right now. We're trying to be very, very quiet. But it's not really like that, guys. All we need to do is just wait for the price to get in here. Now, like what I like to do when my eyesight might fail me is just to put an alert here. When I put an alert here, as soon as I hear that sound, it means buy or sell, depending on what it is. Or maybe it might mean sometimes I do it when I'm in good profit and I'm programming or something and I can't look at the screen. I put a certain sound of alarm, which if you're a MetaTrader, if you didn't know you can change it, you can. If you click on right click on the alarm and modify it, you have a whole bunch of sounds you can use. You can even upload your own onto the sound area like this. And it should bring up a file place that you can actually put your own sounds in there. So you can literally put music that will tell you that, all right, you need to run this. So if it says the condition here can be if the bid is greater than the price or less than the price, the bid is greater, ask is less, ask is greater, time equals to a certain time. If you put equals, if you put time here, you can put the value of time you're looking for. So it's pretty much great options. You've got expiry, you've got quite a few things to go for. I usually just use the bid because that's my main focus sometimes, all right? But it's usually my main focus. So if I press OK anyway, as soon as I hear the alarm, this would be the trade I'm taking. Now, obviously on this account, because there's quite a lot of profit, all right, because of the challenge, there's quite, if I go to it, I'm right now I'm at 160, just like I showed you guys this morning, 168, 167, something like that, all right? So I could actually take a good lot size, but to keep in line with the challenge and the rules of the challenge, which is to keep the lot size really for me personally between 0.01 to 0.03, unless I close, because to be fair, the profit that's floating right now is not actually my profit until I close it. Let's just be honest. All right. So I could decide that, just to keep on holding it and not be wise, and maybe the profit doesn't come in as I want. And then all of a sudden now, I'm back to square one. So when I close this account or I close these profitable trades or whatever I do, whenever I do, all right, and my account balance, let's say it was at 176 instead of the £7 profit, and it went to 176 equity, then of course, this tool would work a bit differently. It will work with the account balance. It works with balance, not with equity. I do believe you can change it to equity. I double check to see if you can. Inputs. Yeah, you can say use balance or use equity. So if I say use equity over here and I press OK, now when I do this, and I'm going to close now, if I do this, all right, it's still, because I think, let me see this, because 179 is the equity, I think it's still trying to go for 1%, but the equity doesn't seem to be working that well. Maybe I need to put it back on the chart. So let's start it again. All right. You're not really using it. Doesn't really make a difference to me anyway. You could do the quick maths for balances that are like £100, £200, not really a big deal. So use equity. Okay. You can also use money, I guess, to choose this. So let's try that as well. Now, this is a tool that I've used for many years. Let's press OK. Close it. If I use a money amount, there you go, pretty much. All right, so not bad at all. But anyway, I think it's still considering my my actual balance until I close these trades, but that's all right anyway. Not a big deal. But anyway, if I just use this risk management tool, use 0.01 as my starting point, right? Let's go for it. Close that. So with this tool, I'll make sure that sooner or later will be available for you guys to use, and I'll go for a proper tutorial on how to use it. But what I'm going to say is that for me, judging by the kind of profit that I've got going on right now, 174, if I was to risk, I think about £3 to £4 would be all right. Safe. £5 is maybe the maximum limit. So for me to risk £5, really, if I put my stop loss immediately above the low, I personally probably want to keep it maybe even wider because of this challenge. It's a challenge, so that might be the case. But of course, at the same time, I want to keep it specific, because if the body of the candle is going to close beneath you, then it's going to descend short. So why lose more money when it's already dropping in the wrong direction, right? But anyway, if the price gets into here, I'm looking for, we've got 86p. So if I times that by 5 or about £4, I'll probably put 0.05 here. And I'm going to set my target for the far away one, okay? The only reason why I'll change it to a closer take profit is if what we just talked about with the dollar index happens. All right, it's 5 o'clock now. So we'll see what happens with the new candle for the dollar index too, right? Let's go over to it and see. So it's 5 o'clock and it's still pushing long. So we've got a new H4 candle form right now. So we're just going to watch out and see. This last 4 H4 candle is going to be very important and a very strong determining factor of what we do. All right, but still looks like the price hasn't gone in there. So you're going to have to probably do this off the live. I want to give you at least an hour of my time, guys, at least. So I hope you guys really enjoyed this session, and we'll catch up very soon. All right. So everybody take care.